get through this particular development or this update. And with me joining today, we have Vinay Tiwari here, who is the head of finance at CoinDCX. Then we have Rohit Razdan, who is the chief business officer at ClearTax, and Preeti Khurana, who is the director of advocacy and regulation at ClearTax. Right? I'm going to be your host for today, and my name is Akshay Singh. I'm the community manager at CoinDCX. It is lovely to have all of you, and thank you everyone for joining in for today's session. Vinay, Preeti, Rohit, welcome. Thank you for joining. Thank you for making your time for all of us to share the insights and what do you feel, how what sort of narrative is building up, and the developments which are taking place around the update that has come out in the budget session yesterday. So we'll be talking about that, deep diving into that. But before we get into that, a little bit a brief introduction of yours. So we'll start with Vinay. Vinay, please share a brief introduction of yours, and we'll take it forward from there.
Thank you so much, Akshay, first of all, for doing this, organizing this, and giving us an opportunity to speak with the audience and with the experts. So briefly about me. So my name is Vinay. I had finance for CoinDCX. I'm a finance enthusiast. I love everything there is in finance, be it tax, be it valuation, be it investing and whatnot. So that's briefly about me. Happy to be here and getting to learn a few things.
Thank you, Vinay, for sharing that. And Preeti, a bit about yourself as well.
Hi, everyone, and thanks, Akshay, for that introduction. Pleased to be here with Vinay, Rohit, and Akshay. I'm a chartered accountant. I've been with ClearTax for almost 8 years now. And I do all things taxes. I love taxes, a subset of what Vinay does. But yeah, quite excited to be here and looking forward to addressing all your questions.
Thank you, Preeti. Rohit, over to you.
Hi, everybody. Thank you, Akshay, and others for this session. Hopefully, it's a lively one. A little bit about me. I look at various aspects of business at ClearTax, including strategy, revenue, and so on. So we have a lot of fun, keeping up with government and taxes, and which is a very lively domain these days. Been here for close to 3 years. Prior to this, spent a lot of years in investing and a few years in consulting. Just like Vinay. I'm an enthusiast of all things finance, and at a personal level, I love crypto. I've been following it for a very long time. So excited to engage in this particular topic as well.
Thank you, Rohit, and thank you everyone for sharing your lovely introduction. So we all have been looking forward to this for quite some time, and let me set the context first, and then we'll get into the session. So in the recent budget, yesterday budget 2022, the Honorable Finance Minister, Mrs. Nirmala Sitharaman, has announced quite revolutionary changes to the virtual asset class. And it is for the first time the government has officially termed digital assets, including crypto assets, under virtual digital assets, right? These comprise all the cryptos such as Bitcoin, Ethereum, and other digital assets as well. Uh, Popularly referred as NFTs or non-fungible tokens too, right? One of the major takeaway, or one of the major highlight of this development taking place, or this update, was that the government has announced a flat 30% income tax rate on the transfer of crypto assets in the proposed tax regime. And it is what we will be discussing a bit more or in depth on this session. Uh, However, this is a major step by the government in providing clarity to investors and entrepreneurs transacting in digital assets in India, and is a step in the right direction towards regulating the crypto industry, right? So, being said that, here's the first question I would like to put it out, right? That what do you guys think, will be the long lasting impact of this recent update we heard yesterday in budget 2022 is going to have on the virtual assets industry? And would like to start with you, Vinay, on this.
Thanks, Akshay. I think, first of all, let me take this opportunity to congratulate the government and the finance minister for a wonderful, very progressive, and a forward-looking budget. I think the budget set the context and actually, highlight that India is very serious about, setting a, uh, creating an economy which is digitally savvy, which is based on digital innovation, and which will promote the blockchain technology and every application, around the blockchain technology. I think budget touched base upon a lot of points which will eventually, will help in developing the blockchain technology and will pave a way for a sustainable growth of the technology of blockchain and crypto in this country. I think the budget will definitely have a very long lasting impact, as you pointed out, and this particular thing is going to provide us tremendous opportunities for growth. But at the same time, I would also want to call out that with opportunities, it also set kind of responsibilities on us, that as the industry, we make sure that whatever we do is on the right side of the law, and whatever we do is basically, completely compliant and investor friendly. So I think it's going to be very fruitful, useful, and will provide sustainable opportunity for growth to the entire industry.
Thanks for sharing that, Vinay. So, Preeti, what are your thoughts on the same?
Right. So I'll focus my comment around cryptocurrencies. I think it's firstly what this new regulation has done is that it has given at least some form of certainty to investors. Working, existing in a environment where you're putting your money into something which the government has absolutely no regulation on is actually pretty gray area. It's very difficult and challenging to think about how you would pay taxes and how you would go about investing. So in that sense, that's definitely a step forward, that now there is at least some indication around what the government thinks about it. The other thing I feel is that, now that our government has warmed up to this, whether or not countries decide to regulate it or tax it, there's no stopping cryptocurrencies. They are here, and there are actually two aspects to when you're investing into cryptocurrencies. The first is using the technology itself, and like Vinay said, the government has shown interest in using blockchain technology for payments and for various other activities, and the other is the investing part of it. So I think the government has now sort of warmed up to both of these aspects, and which is very heartening, and I think that's one step ahead, and let's see where it goes.
Definitely. So tremendous opportunities. Equally, the responsibilities are there as well, and there is no stopping to this entire movement or to this entire industry, as quoted, as nicely put by Preeti and Vinay. So Rohit, would you like to add anything to this part, or what is it that you feel that gonna be the long-lasting impact of this development going forward?
Yeah, so good question. I think Akshay, my fundamental actually what Preeti also said, right? In fact, uh, Mrs. Sitaraman opened her speech by saying that the magnitude and frequency of these transactions is too big to ignore, right? So I think the first thing is that the government has it's what is now clear is that they're observing everything around them, right? And things which are becoming large, they are showing an openness to to incorporate them into their thought process, right? So to me it feels like a big strong forward step, right? When you have regulators engaging on such massive tech led changes and so on, right? In fact, this time when I was going through the text of the speech, right, there was so many technology oriented words that I was actually quite blown away. I think there was blockchain somewhere, there were drones somewhere, there was like digital education somewhere, right? So actually the density of digital words, right, is so high in budget now that that's quite encouraging, right? And if you had told me like 2 years back that our FM would be defining crypto in the budget, creating a path for digital central currency, I wouldn't have easily believed, right? If you had just told me a year or two back, right? Now, second is like broadly, as everybody mentioned, right? Digitization is a national priority, right? Now, right? I think 4 or 5 or 6 years back, we heard those words, but what those words would mean was not clear to us, right? After UPI and some of those things, digitization as a national priority is becoming very, very clear, and I think credible for everybody, right? What is also clear, especially at ClearTax, what we see is that taxation as a national priority is also very clear, right? The government fundamentally is saying that we have to build our country with our money, right? So they will take practical and not very, very deep ideological stances about like things that they like or don't like, right? So I think that's also kind of very important for us to understand and acknowledge where government's taxation mindset is, right? Third is it feels like a big leap forward from just a few years back, right, when Supreme Court and government were like having debates, right, about various aspects of crypto, and when like nationalized banks and other banks are putting out certain limitations, right? So when you think about like how much distance have we covered in the last 2 or 3 years, right, that feels like a long distance, at least to me, right? But in the grand scheme of things, right, this is still very, very early, right? Directionally, government has taken a very, I would say, right now, a little bit what feels like a conservative stance, right? The treatment of crypto related income and so on is different than regular income. And it is even different than regular asset, right? There's no loss offsetting, there's no indexation. These things could over a period of time evolve, right? And then the last thing I would just say is that as we are all aware, the underlying space, right? Cryptos, tokens, smart contracts, all of these are themselves an evolving space, right? So as the evolving space, the underlying asset and their use cases change, I think the government will kind of change its mind as well, right? Like it could evolve in whichever way. But at least now there's a framework on which anything can be built or modified. Without a framework, it becomes very complicated.
Definitely a long way to go, but it's a really great start, or a really good start that everyone will be getting with this update and development taking place. Now, one of the key takeaway, or one of the hot topic in the news of this development, as a result of this development taking place, is the talk around 30% flat tax rate on cryptocurrency, which will be applied on cryptocurrency portfolio gains, right? So we heard that there is going to be this 30% tax that'll be applied on your crypto gains. Now, can you please share, and this would really like, I mean, this is the beauty of collaboration, right? We get to bring in experts like you, Preeti, and get to pick your brains and insights into it, from a point of view wherein the facts are really laid out and clear to the audience and to the users and to the community, right? So can you please share, like, with us, what does this mean, right? Like a 30% tax that'll be levied, what does it mean, what is it, and who is it applicable to?
Right. Yeah, I think it's important to truly understand why they would do a 30% flat tax rate. How does it apply? Who does it apply to? So firstly, let's just try to understand where is this tax law placed in the entire scheme of things. So if you look at the section that they have chosen, what it simply implies is that they've considered it as not an asset truly, because it's not under capital gains, not as business income because it is not placed under business income sections. It has been set aside in a separate set of sections under section 115, and therefore it is clearly out of the usual types of incomes that we earn. That's the first thing, that they've decided to categorize it as something completely different. Now when we come to the section where they talk about how you should pay tax on it, who should pay tax on it, as such it applies to everybody. So there's no demarcation that it has to applies to individuals in a certain fashion or businesses have to pay tax on it differently. It's a blanket provision. It applies to anyone who makes a transfer of a virtual digital asset. So that's the terminology they have used. Even though they're calling it a digital asset, it's not truly a capital asset in the sense of the income tax act. So within the confines of the income tax act, there is a certain way in which assets are defined, and it's not defined in that fashion. Also, very interestingly, the way they have defined virtual digital asset, they've actually said that they're going to notify. So NFTs will be notified by the central government, which will be considered as VDAs or virtual digital assets. Now coming to the tax bit of this, it's important to see that they've said that they're going to allow you a deduction for your cost of acquisition. So whatever payment you will receive in respect of your virtual digital asset, and we are going to come to that payment perhaps a little later, but for true simplification, let's just understand that whenever you sell or transfer, so transfer is the word, whenever you transfer a virtual digital asset, whatever is the consideration, reduce your costs from that, and that's it. So no deduction for expenses that you may have incurred to to sort of maintain that digital asset, or to exit that asset if you paid certain brokerages or commissions or whatever. None of those costs are deductible, just the cost of acquisition, and no loss set off is allowed. Now that's again a bit of a gray area as to what exactly they imply when they say that no loss set off is allowed. But if you look at the sections just in the manner in which they have been worded, it's pretty evident that they want to treat it like incomes that people earn from, say, gambling, or crossword winnings, or so in fact, something like if you go to a show called a KBC and you have a winning from there, it's very very similar to something like that. And you are not allowed to claim losses in those scenarios as well. So let's say if you have income from gambling, or you have a lottery win, say you have been buying a lottery ticket for the past 10 years and it costs 2000 rupees a month. And when you actually win the ticket, you cannot go and say, look, I've been buying lottery tickets for the past 10 years and this is my cost of acquisition. I mean, whatever, these are the losses that I've incurred and please allow me to deduct those losses. That kind of scenario is not allowed in lottery winnings. It's taxed at a flat rate of 30%, and then additional surcharge, cess, and all of that. So if you look at it from the way they've actually taken a very simplified kind of view around it. They've not gone into details, but if you look at tax laws around the world, they go that extra mile, and they try to classify it as a capital asset, or they talk about trading and business income and mining and so on and so forth. But we have a very simplistic view right now in terms of how they want to tax it, and what are the it's essentially like a revenue generation mechanism right now. But I would say that's definitely a first step in that direction, and gradually we can hope for more understanding to evolve from the government side. So right now, if you have an income, if you make a transfer, you've received something in respect to that transfer, reduce your cost of acquisition, apply a 30% tax rate, and then add it to your remaining taxes on your remaining income, and that's what you pay as tax.
Interesting. Well, that's definitely interesting because, uh, as you likely said, right? There are some gray areas here. A lot of development or update is yet to be received, or more clarity around that. However, even for any framework or any structure to be put into place, it all starts with the simplest of the idea or simplest of the notion, right? And that's probably we might be looking at here with this simplest definition of taxing it the way it should be taxed or the way it has been defined. And moving forward, as more and more development will take place, updates will come in, we'll get to know, we'll get to see how it all progresses and shapes into. Now, that being said, will the impact, right, on maybe the capital or the finances flowing in or out of the virtual asset industry post this development is going to be positive or negative? Or would really like to know your thoughts on this, Vinay. Or what do you feel that in which direction this may move?
Sure. I think actually largely it's going to be positive for the industry. And I tell you why. So first of all, a tax mentioned in the Finance Act is definitely going to provide a lot of confidence to every kind of investors. So now we will see a lot of money, getting into the in the industry, in the asset class, which is going to improve the finances, and going to improve the asset, which is asset under management for a lot of exchanges. So basic, and at the same time it provide a positive direction, which is more acceptability among investors, so that's going to help significantly. Having said that, I think it is going to largely benefit, but I believe that there are certain provisions which, if would have been slightly different, it would have made a huge difference and would have improved the fund flow a little bit better. I'll just maybe highlight a few of them. One is this 30% tax slab. As Preeti was saying, that these are tax slabs which are highest in the country and are applied to a lot of activities which in a lot of cases are the income is dependent on luck. Crypto is not like that. This is asset class wherein you need to understand certain technicalities and fundamentals of the asset and then you invest. So basically this is not a function of luck but skill, and hence this 30% tax rate should have been lower, if not like specific rates which are applied in case of equities, but if the tax was allowed on the normal slab, that would have been much better. The other piece which Priti highlighted, that the losses are not allowed to be set off against any other income. And the largest one, in my opinion, would be that losses in a particular year are not allowed to be carried forward to the next year. I think, which is a very, very big, big problem as I see. Having said that, I think the overall theme is very positive. As you said, in the beginning, that whenever you move to a journey, I think it starts with the first step, and I think the first step which government has taken is absolutely on the right direction. And I'm sure from here on, acceptability from government, from a lot of large investors will improve. And as we move along, not only the tax regime, but overall regulations will also, come out, and which will be very positive, is my sense and my belief. So yeah, I think it's a very good step in the right direction, but I believe a lot is yet to be done, and we are
Definitely,
confident that yeah.
definitely. And correct me if I'm wrong, but it's when you say problem, right? Basically, I believe what you're trying to address or you're trying to point out is that if things would have been a bit, let's say, more lenient in terms of the tax slab, or there would have been more less ambiguity and more clarity, then it's just that it will encourage more and more retail traders or investors or entities to look towards this, as compared to what all impact it's going to have. Basically, that's what you're trying to refer to, right? It will
Ab-
encourage more and more participants to take participate in the ecosystem, right?
Absolutely, absolutely. What I'm trying to say, Akshay, is not as a problem, but what I'm saying is all these provisions would have created a more conducive environment and would have helped the industry much better. But as I was saying, this is a very good step and in the right direction, and I'm sure it is going to be extremely beneficial for the entire industry.
Definitely. That's really interesting to know that, Vinay. So another point that came out during this update, or when this development was taking place, uh, was related to TDS on payment made in relation to transfer of these virtual digital assets. Uh, and to be very precise, it was at the rate of 1% of such consideration above monetary threshold. However, that threshold is not yet defined anywhere as such, or yet. So, can you help us understand, Preeti and Rohit? I mean, anyone whosoever this question might fits the best. That for a layman to understand, right? What is TDS and where does it apply, so that at least they can make some sense out of it, wrap their head around of this particular update, and get to understand that, okay, what basically this means, right?
Right.
So anyone, Preeti, Rohit, anyone can pick it up.
Sure. So Akshay, when we try to understand TDS, it's actually a concept that we are all familiar with. Firstly, just let's try and understand TDS in isolation of cryptocurrencies. TDS means tax deducted at source. So whenever you receive your salary income, your employer makes sure that TDS is deducted, and your employer will, which means that the employer will calculate your taxes according to your slabs and then deduct that tax and go and deposit it with the government. And when you actually sit down with your Form 26AS is when you can spot that TDS entry in your Form 26AS. Now, an employer may have complete awareness about how much is your total income, because for most of the salaried class, salary is a large part of, or almost 80-90% of their total income. But in other scenarios, usually the one who's paying you does not have a clear idea of how much your total income is likely to be. And therefore, there are different TDS rates which have been set up in the Act. Some are 10%, some are 1%. And for example, I'm sure a lot of listeners are familiar with TDS on immovable properties. So when you sell a property, the buyer, before making a payment to you, will deduct 1% TDS and go and deposit it with the government. Now, the intention behind all of this is that the government should know that you've received a large sum of money, right? It creates a trail for the government to track. So, when somebody pays you and they deduct some money from that, two things happen. A, the government knows that you've earned an income, and B, the government earns its own income. So it's also a revenue generation mechanism. They already receive an income. For example, if you undertake a transaction, say in the month of April 2022, the TDS is deducted when you undertake that transaction, and it's deposited in whatever is the specified time frame. So that means that the government doesn't have to wait until the financial year ends and you file your tax return and you pay your taxes or you pay your advance tax. It's usually as you earn an income yourself, the government is also earning an income. And like I said, the most important aspect here and the intention here is to add a trail to the transaction. So the government knows that here is this person who undertook this transaction in cryptocurrencies, who transferred an asset and who received a consideration, and a certain amount of TDS was deducted on it. I think that's the pure intention behind this change.
So just to add to what Preeti is saying, what fundamentally that means from a customer standpoint is, uh, whatever you are doing now, that trail is visible to the government, right? I think, and if that trail is not completed, let's say somebody does 1%, right? You either have to show over a longer period of time you're holding something, right? In your log, or you have to show that, hey, there's some taxes that I paid, right? So that hanging thread, will probably, can lead to scrutiny, questions, and so on and so forth, right? So just customers have to be cautious. Just on a lighter note, who knows, right? Like this whole 30% regime just may create much more hodl, as they say, right? Like a lot of people holding for much longer time, and the fundamental problem with cryptocurrency has been the volatility, right? So unknowingly, unwittingly, the government may have created more incentive for Indians to hold the crypto asset.
To hodl. Yes, yes, that's a really good point and interesting point, Rohit. Uh, yes, definitely something to ponder upon. That uh, will this mechanism or this update or the structure, right, is going to boost the fundamentals as well, right? And that's what my next question would be, is that and this goes out to you, Vinay. Like, how's the trend so far, you have been seeing as far as the numbers are concerned, be it financial numbers, right, financial slash capital numbers, or fundamental numbers within the virtual assets industry, right? How far how those numbers has been so far, and where we might see them heading towards, right, fundamentally and financially.
Sure. I think, Akshay, in the last 1 year, one and a half year, we have seen significant increase, significant acceptance, both in terms of number of people who are there in the industry, number of people who are investing into the industry. I think those numbers have grown exponentially in last 12 months specifically. And with this budget, my sense is this number is only going to go up, and going to go up exponentially. So that's on the numbers side. Obviously, uh, while on the fundamental side also, I think a lot of work is happening in the industry. There are so many exciting ideas which are there. People are working on a lot of new ideas, new ways, new DeFi projects which are there, and people are working on it. And we are very excited. We are very excited to see how the industry is, moving along, and how the new developments are happening. And with government's announcement in the budget, that thing again is going to only go up. And very, very excited to see this thing unfolding in front of us, and that's going to be extremely beneficial for us and for the entire industry. Having said that, I think, But the budget absolutely provided much needed impetus for the growth in the industry, but it was bittersweet. There were certain things which could have been much better, but at the same time, a lot of good things for us. But I genuinely believe that this is just a start. Government has provided us a roadmap which is going to help us, in creating a very good industry, and I'm pretty sure that the industry is going to contribute its bit in making the 5 trillion economy dream which India has for 2025 a reality. So yeah, I think great growth I see there.
Interesting. Thanks for sharing that, Vinay. And when it comes to uh, yes, when it comes to developments taking place within the virtual digital asset industry, right? The curve. It's not just that the adoption curve is on an exponential rise. It is even the developments which are taking place are quite exponential, right? Be it in terms of DeFi, metaverse, NFTs, even the infrastructure layer projects which are there. Uh, uh, a lot of development is taking place, and everyone is just doing a tremendous job on that front. Now when it comes to that, definitely I'm pretty sure that we guys can between us, like Preeti, Rohit, Vinay, between us guys, we can keep on going, talking in length on hours about any particular topic or subtopic within crypto, because there is no short topic in crypto to talk about it. The conversation just keeps on going on length. However, we just gonna take a moment here, or we will just move on to the next section of this particular session, which is to cater and to answer the questions that our community has, right? Our community has a lot of questions, and that too, they have pretty example specific or pretty specific questions that they have in mind related to this development that has taken place, right? So, moving on to that particular piece, I'll be picking up the community questions that we have received since yesterday, right? And Preeti and Rohit, you guys have to be the savior here for us all, and bring us as much clarity as you guys can from your end, at least to understand the nitty gritty and the details around this development or this update that has taken place. So, moving into that one, the first question that we have is from one of our community member, Akash, right? And his question is, and here the questions may be in Hindi and English, and some might be in English. So, we'll try to use a English, a medium approach in that. If Preeti and Rohit, you guys will be comfortable with that, please definitely pick it up in that manner. So the first question that we have received from Akash is, uh, क्या टैक्स के लिए कुछ रेंज है इन्वेस्टमेंट की, लाइक 100K से ऊपर ही लगेगा, लाइक 1 लाख रुपीज से ऊपर लगेगा, या 50,000 से ऊपर लगेगा, या 10 लाख से ऊपर लगेगा, या ये सबके लिए है?
Yeah, I can start there and Preeti can add. So I think overall it might not be well received, but it is applicable to everybody. There is no minimum threshold. There is no maximum threshold. There are no slabs, and there are no losses. Right? I think a lot of people, especially we've also been getting questions nonstop since yesterday. I think most of the people are thinking of this either in income tax terms or in terms of equity terms, right? That's why the whole offset concept is coming in and slab concept is coming in. So let me just clarify what Preeti said some time back. There is no slab. There's only 30%, and it's only on profits, right? So एक लाख तो छोड़िए, मतलब if you have 100 rupee gain, right? I think I saw a bunch of other questions which had like the same question with like 500 rupees. One guy had 100 rupees, one guy had 1,000 rupees. So it doesn't matter. You make 10 rupees, then the 10 rupees is taxed, right? At a 30% slab. And let me kind of also clarify a related question. Let's say if you made losses in year one, right, for 1 lakh rupees, and in year two you made gains of 1 lakh rupees. Uh, those two don't offset to make it zero. The first loss is yours. The next gain is mutual, right? And that has to be shared by the government. 30%, right? So just to clarify, because the same question is repeating quite a few times, so just thought I'll clarify. Preeti, please feel free to add anything else.
Yeah, that's just fine. I'll take the next one.
Sure. Thanks, Rohit, for that. So the next question is from Tarun, and I'll try to keep it simple, but let me know how it goes, Preeti. So Tarun is asking, hypothetically, let's say if he sells one Bitcoin at around $50,000, okay, and then buy back two bitcoins at $25,000, which is like Bitcoin price has reduced by 50%, or there's a 50% reduction there, and then Tarun is able to get two bitcoins at a price of $25,000 using the same money, okay, which is the $50,000 initially he got for selling one bitcoin at $50,000, right? And he holds it for like 2 years, 3 years, whatever the time frame may be. So Tarun's question is, does he still have to pay tax on this investment or this particular maneuver?
Yeah, absolutely. That would classify as a taxable event. The first one where you exit that one Bitcoin, and whatever consideration you receive, you have to actually go back and see what was the cost of that Bitcoin for you, and you have to reduce that cost and pay tax on it. At least that's what the laws say right now. There is no scope for you to be able to reinvest the proceeds and save tax. I mean, it doesn't work in that fashion. So what you do after making that sale, whether you reinvest or you withdraw that money, that's inconsequential. So you have to look at what is the taxable event. And in this scenario, the taxable event is when you have received a consideration for selling that one Bitcoin, reduce the cost of purchase and pay tax on the gain.
Right. So the next one is coming in from Mukesh Kumar Singh, and इनका क्वेश्चन है कि अगर मैं P2P, which is peer to peer transaction करता हूँ, right? Then how will this be tracked, or how this will be recorded?
Right. Okay, so as such, अगर आप देखो income tax act में, it has not specifically addressed the P2P scenario, right? It's not very clearly addressed as to how this will take place, but there are few aspects to it, and we'll touch upon those. The first aspect is that is it considered a gift? So is it you're receiving a gift? In that scenario, you have to go to the gift tax clauses, and there it's very clear. So if anybody wants to understand how gifting of cryptos will be taxed, it's very similar to how any other gifting will be taxed. So if your gift, the value of your gift exceeds rupees 50,000, then the entire transaction becomes taxable, provided you're not related to that person. So if you're one of the specified relatives, son, daughter, father, mother, those kind of relationships, then there is no tax liability. Or if you're receiving it on a wedding or as part of a will or inheritance, then again the receiver will not pay any tax on the gift. But otherwise, if you're doing a lending scenario, you may have a certain income that may be generated. Or if you're receiving it as a gift, then look at the gift tax provisions. If you are doing a sort of a lending and you're earning, say, an interest, a kind of an interest on it, that's not specifically addressed right now. But I would encourage tax all investors to actually look at such an income as interest income and report it under income from other sources and pay tax according to their slab rates. Otherwise, if you look at the TDS provisions, there it definitely says whether you're doing a kind for kind or if you're doing a transfer, then all the TDS liabilities will come into place. So I think there's still few areas which are gray in that aspect. But in terms of whether tax will apply, I think tax incidence is clear that if you're receiving a consideration and they've not specified that this consideration has to have generate like an fiat, it should be in the fiat format. So it could be a kind for kind transaction, and even then the provisions will most likely apply.
Thanks.
Just to add there, Akshay, see, fundamentally the question that Mr. Mukesh was asking was around P2P, say payment karunga, right? So I think the fundamental thing is the government, and this is a big debate overall, right, for several years. What is crypto, right? Is it a currency? Is it an asset? Is it a commodity, right? Like the three views that have been there for a while. Government has taken a view of asset, right? So any transaction has to be seen as if you have given somebody an asset and gotten something for that asset back, right? So it's not, government has strictly taken not a currency view right now. So just thought I'll just
Right,
clarify.
right. Yeah, that's really interesting to note. And so this may be a follow-up question, or it may be completely different or not related at all to what you just said. But one of our community member, which is Akwaram Mamta, is asking, so will this TDS be applied to every sell and buy transaction? Because in that case, it takes a lot of tax daily.
Well, actually, this TDS is applicable on a transfer, where, and it's applied to the consideration that you have received. So our understanding is that when you're making a sell transaction, is when, whatever consideration you will receive will be 99% of what you would have received without the TDS. So it applies on all the sell transactions where you will be paid 99% and 1% will be deposited with the government.
Right. Okay. Okay. Uh, well, thanks for sharing that, Preeti. And here I'm gonna be clubbing couple of questions all together. These might, may feel like that we may have answered it earlier, but we'll just club it. So Rajat, Shreyas, and Aman, right? They have asked a question on the lines of, uh, is tax implemented on every cryptocurrency, even if we just profit below 500? So अगर मेरा प्रॉफिट 500 रुपीज से भी लेस है, राइट, तब भी क्या इस पे टैक्स एप्लीकेबल होगा? एक एक इस टाइप का क्वेश्चन है. सेकंड इज, if I earn only 1,000 rupees, again, like if my earning, if my profit is really less, right, then still do I have to pay tax? And will there be 30% tax to every user? I mean, more or less, the question clubbed together is the same only, like, this particular 30% flat tax rate. Uh, is it above for a certain threshold only, or it is applicable to the, even a very basic minimum amount of, say, 500, rupees, 50 rupees gain as well?
Yeah, so I think just quickly, I think we had touched upon this earlier. There is the materiality threshold is above zero, right? So if you're above zero, you are paying 30%, right? Like I said, I think uh, I think that materiality threshold is taking time for people to absorb. Is it really material? And see, again, over a period of time, you know, government may change their stance, right? But right now, you know, if you're making whatever, right, 100 transactions of crypto in and out of those 50 are losses, 50 are gains, you know, 100 rupees each, right? You have a liability of 30% times the total gains that you have made, right? So there's no immateriality threshold there, and it cannot be offset against anything. It cannot be clubbed with any other income or any other asset. It's a separate class, as Preeti mentioned earlier.
Right. Okay. Okay. uh, Moving on to the next one then. uh, Just give me a moment. So, you have received one question from Paresh Gharat. So, if an individual is buying crypto after 1st of April 2022 and
Yes.
hold it for 2 to 3 years, in such case, the TDS will be charged in 2022. So, when does an individual need to pay 30% tax if sold 3 years later, whether in 2022 or after 3 years by subtracting the gains?
Well, actually, you have to pay it when you do the sell side of the transaction. So, whenever you decide to sell it, so long as you're holding it, nobody will charge any TDS or any tax on it. It's when you exit the currency, you use it in some fashion, you receive a payment for it, is when the transaction will be taxed. And that is the tax incidence. So, so long as you're making a buy, I don't think the TDS provisions will apply. It's only when you're exiting after whatever holding time period, could be 2 days or 2 years, is when the TDS will come into effect.
Right. Okay. Okay. Interesting to know that. So, there's one more question coming in from another one of our community members, Sagar and Rohit. I think that you have already answered addressed it earlier, but might be able to add in some more insights if any. Right. So, does this 30% tax is applicable on withdrawal or per transaction when we sell our holdings, our crypto holdings, say for example, and withdrawal as in like
Out of the
crypto
wallet.
wallet withdrawal or crypto to crypto
Correct.
withdrawal.
Yeah, no, so it is about whenever you exchange, let's say INR and the DVA, right? Sorry, yeah, VDA, the virtual digital asset, right? So let's say if you sell and you keep your money in the wallet, it doesn't matter. You have still, made a sale. You have made you liquidated your virtual digital asset, and therefore you're liable to be, from a taxation standpoint. The fact that you hold it with a particular exchange in their wallet is not government's concern. As far as they are concerned, you have just sold that crypto and made some gains.
Okay, okay, makes sense, makes sense. uh Fine. The next one, and we have received this question from a couple of users and the community members just feel the need to address it as well, though we may or may not have a definite insight into it, right, as of now, but we feel like that in our own capacity, the best we can, we would like to address this. So Ranjit and Sumit, along with other community members, have asked or are trying to know that from when this will take into effect. Like, kab se lagega tax? Ya kab se this thing will come into effect? Into effect.
Right. Okay, so if you look at the taxation bit where they talk about the 30% tax, it's applicable from assessment year 23-24, which means from financial year 2022 to 2023, which means any transaction of where you receive a consideration starting 1st April 2022 is when this will come into place, and that's when you need to pay your taxes. If you look at the TDS rules, those come into effect from 1st July 2022. So there are few more months to go for TDS, and I think that has been done to sort of give more clarity around it, to let people, because when you deduct TDS, you have to have a TAN number, and who should deduct TDS, and what is the manner of depositing it, what are the forms which are relevant. I think all of that process will take some more time, and therefore an extended time period has been allowed until 1st July, but the tax rules will come into effect from 1st April, which is forthcoming.
Okay, right. And correct me if I'm wrong, Preeti here, but once this proposal is has become a law, it is then starting April 1st it will come into effect, right?
Absolutely, absolutely. So right now, what we have is the finance bill, and then it will be passed by the parliament. It will receive assent from the president, and it will be published in the gazette. Is when it becomes a law. But even when it becomes a law, it has various dates of applicability, and those provisions start to take effect. But yeah, right now it's a bill, and it needs to be sort of approved in that sense. And there are always, whenever we talk about any bill, and when it at the time of final passage, there are definitely amendments. We've been noticing since the past few years a couple of amendments to various sections, or if there has been an error in any of those sections, it is passed as amendment to the finance bill. So even those scenarios have happened. And sometimes if you see a glaring error in what has been announced, there could be an amendment to that as well. So you're right in the sense that until the final passage, this is not a law right now. It's a bill, and we have to understand it as a bill. And once it is finally passed, if there are any changes, those are made through a separate document. So you'll receive a separate document which would be amendments to the finance bill.
Right. Okay. Okay. Until unless those amendments or changes have been done, then this is as discussed. Whatever we have discussed today stands true. Right.
Right.
All right. All right. Okay. That's really interesting to know. I'll be really honest. There are a lot of queries around TDS, which definitely, at least tells us one thing, that there's a lot of ambiguity and uh, a lot of clarity is needed around that particular piece. And uh, with the progression of time, as more and more updates will surface, more and more facts will surface around that, we'll definitely be keeping all of you in the loop. We'll be keeping all of you educated and aware about what those scenarios and conditions may be. However, we'll try to see if we'll try to pick one or two cases here. And again, as I mentioned earlier, we'll try to share the information around that to the best of our knowledge today. And before we even get into that, there is this one question which has come in from one of the community member Ashwik. Okay, uh, and the question is, how can a middle class person can get profits if the taxation on the cryptocurrency is going to be around 30%, right? So, a really insightful, or would say a very genuine question, Ashwik. And this is where, one of the points that come up in a conversation earlier that I had with one of our compliance associate yesterday, is that having such updates or developments taking place, right? It gives you more clarity around uh, what and why are you here within this industry, right? It takes that part away wherein you're just uh, maybe putting away your money, right? Or just hearing others about the industry or the nature of the industry, or the way the gains or the losses works, right? If you have some predefined conditions, say so for such as of a 30% taxation, right? Before even moving anything, right? Your funds, or taking any action on from an investment point of view or from a trading point of view, right? You will be taking all that into consideration. You will calculate your gains, your losses, your position, and that is how you will take a calibrated or a calculated position into the market, and you'll be able to surface or resurface higher than whatever the proposed taxation may be. So I hope that does help you out to some extent, Ashwik. But being said that, let's move on to the next one. So one quick question, Preeti, would like to send it your way, which is coming in from Ambrish. Okay, and again, this is around the tedious part, but feel free to share the insights or the facts with us to the best of your knowledge on this particular one, which is, please clarify this 1% TDS part in a way which is, say, for example, if I buy crypto for 100 rupees and sell it for 200 rupees, then my profit made is of 100 rupees on this particular trade.
Right.
Okay. So the TDS, if deducted, will be 1% of profit, which is 100 rupees, or the received amount, which is 200 rupees.
All right. Yeah, that's a very good question, and I think we can truly simplify the TDS and the taxation aspect with the help of this example. So, Amrish, if you're selling something which you where the cost was 100 rupees and you sold it for 200 rupees, then you will receive 1% less than 200. So TDS of 1% will be deducted on 200 rupees, and you'll receive it your consideration net of TDS. But when you're paying your taxes, when you're so you'll calculate your gain as 100, so you will actually gross up your consideration of TDS. So you'll do 200 minus 100, which is 100 rupees will be your gain, and you'll pay 30 rupees as tax, whereas 1% out of that has already been deposited on your behalf, and it will appear in your form 26AS, and you can take credit of it and all of that. But the TDS deduction will happen on 200 rupees. I hope that makes it clear. At least that's the understanding that we have right now from what is available. in the finance bill, and I think more clarity will emerge gradually.
All right. Okay. Thanks, Preeti, for addressing that. Um, I'm just going through the questions here and see what we may have missed or not missed. Just give me a quick moment here. I'll just have a quick look and
And Akshay,
uh,
just to mention very quickly, just to share something with the community, right? Like um, there are a lot of sub use cases that we have seen, including like one question that came from like a 15-year-old, right, who's also trading and so on. So just you can go to cleartax.in/crypto-tax and look up at the bottom. There are questions that we are updating. Our experts are taking the point of view and clarifying as much as they can. So even if people miss this session or whatever, there is, you can go there and you can write to us, and we'll try to answer to the best of our ability. Just wanted to mention this. cleartax.in/crypto-tax.
thanks, Rohit, for plugging for sharing that. And there is one really interesting question that I've come across. Preeti and Rohit, please feel free to jump in on this one. And this has come in from another, like one of our community member, Murli, right? And the question is quite interesting. Let me put it simply out there. So. Uh, we discussed, and Preeti, you clarified, you mentioned that once this proposal comes into motion, becomes a law, then starting April 2022, the implications will be there, and for the TDS starting from July 2022, the implications will be there, right? So what Morley is asking, uh, do we need to pay taxes for only profits, right? That will happen, or that you will be making or gaining post April 2022, right? On the profit that you will make, or it has to be done, or it has to be paid on any profit or money that you are making even before the tax implementation, or the rule comes into effect, which is going to be April 2022.
Right. I think that's $1 million question, Akshay. Let's try and understand this. Now, the government has given us a law, and it has not done a retrospective effect, right? But the government has told us that this is how they understand these assets, and this is how they're going to classify it, and this is how they're going to tax it, right? Now, when you're reporting your income for financial year 21 22 is when you are going to wonder about whether, how should I pay tax on it? Should I call it capital gains? Should I do business income? Can I do long term capital gains, short term capital gains, or should I report it as business income, or should I just pick up what the government has announced and do a flat 30%? Right now, this depends on a lot of aspects. Now, remember that there is nothing in the law that is going to stop the government from sending you a notice if you have a large income from cryptocurrencies, right? So if you have a large income during the ongoing financial year, I would advise that you take the help of an expert who can truly understand what are these various transactions, what are the losses that you may be trying to offset, what are the expenses that you may be trying to sort of claim. Now, I would consider this the remaining time period as a window that the government has given you to truly understand what your portfolio can land you up in terms of taxes. So I think the coming few months are going to be very interesting for crypto investors to understand tax implications for financial year 21 22, as well as now start planning, what is their exit and their, strategy for the next financial year. So it's important to sort of bifurcate these 2 years. A safe bet is definitely to pay tax at the rate of 30% and sleep peacefully. But again, the implementation of the law is from the next financial year. So there are going to be there's going to be litigation around this, especially if you're someone who has a large income from cryptocurrency. So it could be subjected to litigation. There could be notices, and there could the I think the intention of the government here is to prevent people from using this money in certain other unauthorized ways. I think that's the real intent. So in that, with that understanding, you have to be slightly cautious, look at how large your gains are, and whether you want to take a very conservative view and you want to apply that 30% rate in this year itself, or you want to be slightly progressive, you want to do what you want to do this year, and then you become compliant from the next financial year. But this is a good time to actually think around these tax strategies and to think around your exit strategy between the two financial years. And I think that's where a tax expert will come in and help you make a clear understanding of what is the impact, the financial impact that you could be looking at. So yeah, I think that's truly a $1 million question. And
Definitely.
Akshay and Vinay, I would actually like to ask you, like, how has been the activity on CoinDCX in this 1 day period from the budget? What has been the activity like? Are you seeing spikes, or what are you observing?
So I think the activity level has spiked up. Obviously, people are trading more, and as I was saying, that it is more of a reflection of government kind of coming out with a law and providing a lot of legitimacy, and providing a lot of guidance to the people that where the government is going on. So I think it has been positive, but obviously there were a lot of confusion, a lot of questions which the community and people at large had, and I'm sure calls like these is going to help that, and going to soothe the anxieties people have about this piece, given this is a relatively new concept.
So more,
Definitely, definitely.
more
Um,
activity happened on your stage.
That's absolutely correct.
Okay, interesting.
Right, and that this brings us towards the end of our session. But as Preeti was saying, that a lot of development will be taking place going forward, and this is the time when you should actually think of it, think your strategy, right? How you gonna be measuring things, how you're gonna be planning things, and all of that. And definitely you're gonna need a tax expert in order to take you through your journey or assist you through that. And that's why we have the tax experts here on this session with us, Rohit and Preeti from Clear Tax. Rohit, I believe, have something to share and show you guys. uh, so Rohit, would you like to just flare it up and take the audience through with that?
Yeah, thank you, Akshay. So I think I'd mentioned this earlier. Now it becomes important for all of you guys to keep track, and there'll be more clarity, but it's becoming important to track. So I would say, like, we're gonna be putting out a few tools and things which will allow you to track. But for now, what is important is many of the questions that you guys have in your head, those get answered. And as Akshay was saying earlier, based on full clarity around what happens in case of losses, what happens in case of gains, you form your full opinion about how much to put into this virtual asset class, right? And how much of exposure to take, and how the government could track it, right? So for now, I would just say you can go to cleartax.in/crypto-tax and just educate yourself, right? It's early days on crypto. Just educate yourself. If anything is unclear, please come to us. We'll do our best to clarify. We will, we, as many of you are aware, we engage with both the governments as well as a lot of accounting, I would say, bodies, to help clarify things, and to tell you how eventually things will be implemented, and where there is genuine risk, where there is just things which are not clear, but there's no risk, right? So there's a lot of nuance that can go in here, and it's early days. We can help clarify. Otherwise, please talk to your accountant, your CA, whoever you deal with, and if need be, we are happy to kind of help you guys. Thank you, Akshay.
Thank you, Rohit. Thank you, Preeti. Thank you, Vinay. This was a lovely conversation and a really interesting session. I really hope that we have been able to at least cater and answer at least the questions that were lingering in the heads of our community members and the users out there. Please feel free to keep on sharing your thoughts around this particular update. The community is all open. You can jump into the Telegram channel, you can jump into the Twitter session channel, and just share your suggestions, your comments, your questions, if any be, right? And if as more and more development will take place, as more and more facts will come out, we'll definitely be coming in with these sessions regularly to keep you guys updated. Right, we'll have it from the experts themselves, from ClearTax, right, and we'll keep on bringing you the latest and the most happening updates within the industry as and when that takes place. So thank you, Vinay, for your time. Thank you, Preeti. Thank you, Rohit. And this brings us to the end of this session. It was really great to have you guys here. And we'll definitely be looking forward to have another session with you guys soon. So thank you for your time and have a great day ahead, guys.
Thanks, Akshay. Thanks for being a
Thank you.
wonderful host. See you again.
Thank you, Akshay. Thank you, Preeti. Thank you, Rohit.
Thank
Thanks.
you.
Thank you so much.
Bye-bye.